Welcome back to the Retire As You Desire show. Now, did you know that your Social Security could be taxed? Some people watching this, as our producers here at the TV studio are shaking their heads, they did not know that. A lot of people in the United States do not know that your Social Security could be taxed. And you're thinking to yourself, why is this possible? How is this possible? I've paid into this for 30 or 40 years of my life, and now I'm learning, going into retirement, that I'm going to be taxed on my contributions. It's kind of mind-boggling, right? In today's show, we're going to go into how your Social Security is taxed, why it's taxed, and what causes it to be taxed. So stick with us for the whole entire show, because this is something that I've seen a lot of retirees go into retirement not estimating for. And it creates a tax bill that you kind of get shocked at the end of your first retirement year saying, how is this possible? So for today's show, Social Security is really a beautiful thing. If you think about it, it's almost like a forced savings. Some of the downfalls are if you unfortunately pass away early in retirement, you don't get your full benefit, but maybe your spouse will. Maybe they'll get the benefit if you are the higher wage earner throughout your working years. That happened with my mom and my dad. When my mom passed away, my dad was able to have a higher benefit because of my mom. She was the higher earner. She was incredible. So it depends on your situation. But going into how your Social Security could be taxed is a whole nother conversation in and of itself. And your financial advisor, if they're doing their job, they should be talking to you about this. And this is what we do when we take people through the Retire As You Desire plan. We talk about these things. So from a Social Security standpoint, how is it taxed? What makes it taxed? Let's start getting into some scenarios and some detailed opportunities to learn how things work. So you're probably thinking, I already know Social Security is taxed, or I had no clue, that you're one or the other. So let's get into how your Social Security is taxed in our first segment today. Your Social Security benefits may be taxed and it may be subject to federal income tax depending on your combined income and your filing status. Whether you're single or married, all of these things are going to have an impact on your Social Security income taxation. But let me give you a detailed explanation as to how the Social Security benefits are taxed. This is an important one, so get your pen and paper out, take some notes here. You're going to want to save this for later. Now, determining your combined income. This is important. To determine if your Social Security benefits are taxable, you first need to calculate your combined income, which is the sum of your adjusted gross income. A lot of people reference this as AGI. This is your income from all sources in retirement, excluding your Social Security benefits. And this gets adjusted for specific deductions. Now, there's also non-taxable interest in retirement. This is interest income that is not subject to federal income tax, such as income from municipal bonds. So if you've been a high earner, you have municipal bonds, you're not federally taxed on this. But half of your Social Security benefits, 50%, you could be taxed on a certain amount of this. So this is part of your AGI, which is 50%. So income is equal to AGI plus non-taxable interest and your Social Security benefits divided by 2, basically. It's 50% of that. And that's going to give you a tax threshold. Now, this is very, very important to know. You're probably thinking, this is a formula that I've never heard of. My accountant didn't tell me this, or my advisor didn't tell me this. Listen, it's okay. You're here learning this with us now. We could plan for things in the future for you as well. But understanding this right now could be a huge benefit for your retirement income years. Now, these tax thresholds, let's talk about this. The portion of your Social Security benefits that is taxed is going to depend on your combined income and filing status. If you're single, a head of household, or a qualified widower, all these things play an effect. They have a different role. So if your combined income is between $25,000 and $34,000, up to 50% of your Social Security benefits may be taxable. Yes, 50%. If your combined income is any more than $34,000, up to 85% of your benefits may be taxable. It's unbelievable, right? It's really devastating for some people if you don't know this. Married filing jointly. This is different. If your income is between $32,000 and $44,000, up to 50% of your benefits may be taxable. Yes, 50%. Now, if your income is over $44,000, up to 85% of your benefits may be taxable. Now, this is devastating for some people. They don't realize that up to 85% of your benefits could be taxed. Really important to know this going into retirement. It's better to plan for this before rather than dealing with it afterwards. Could be devastating. But if you're married, filing separately, if you live apart from your spouse for the entire year, the same thresholds are going to apply as a single filer, and it's more devastating than being together. So if you live with your spouse at any point in the year, up to 85% of your benefits could be taxable, regardless of your combined income. Now, if you don't live with your spouse throughout the year, up to 85% of your benefits could be taxable. That could be a big, big blow to your retirement income and your taxes. Now, calculating taxable benefits is very important. Once you determine the percentage of your Social Security benefits that are going to be taxable, you can include that amount on your gross income on your tax return. Now, let's go through an example of this. I wanted to make this pretty realistic. Let's say you have $100,000 of adjusted gross income, and your Social Security benefits for you and your spouse are going to be roughly $60,000. Now, you're probably thinking that's $160,000 of income. Well, it's not really the case because we need to take into consideration your adjusted gross income only looks at 50% of your Social Security benefits. So let's go through this calculation step by step so we're on the same page with one another. And this is very true for a lot of our clients who want $100,000 or more of income in retirement, not including their Social Security. So here's a real life example. Your AGI, $100,000. Let's say, for simplicity, you don't have any non-taxable interest from municipal bonds. But your annual Social Security benefits are $60,000. So your combined AGI plus your non-taxable interest plus half of your Social Security benefits is going to come out to $130,000, not $160,000, but $130,000 for your adjusted gross income. This number is really the most important one to understand from an AGI standpoint, and your accountant can help you with this, or your financial advisor. Because now, with your $130,000 of AGI, this is your combined income. This is the number for the year. And this is the number that's going to help determine what amount is taxable. So we're over some of these thresholds, so let's go into detail a little bit more. Since your benefits are $130,000 from an income standpoint, you're well above the threshold for single filers, which is only $25,000, and for married filing jointly, which is $32,000. So a significant portion of your Social Security benefits, it's going to be taxable. But there are two thresholds to consider. These are very important. And I'm gonna save them for the next break because I wanna make sure that we have a really great understanding for these thresholds. This is why you're gonna wanna stick with us for the next segment. We're gonna get into the details from a tax perspective and what your tax bill could potentially look like, not including the state that you live in, because that's different as well. But today's episode is all about taxes in retirement, and your Social Security, unfortunately, as we said earlier, could be taxed up to 85%. So stick with us. We're gonna have some ideas on how to help you through this throughout the show. Thank you for watching the Retire As You Desire show. So let's take things even deeper right now. Let's calculate what the taxable amount is going to look like for you, depending on your federal tax return. So 85% of your Social Security benefits is going to look like 0.85 multiplied by your $60,000 of Social Security benefits. 85% of $60,000. That means that your taxable amount is going to look like $51,000. You don't need to be afraid going into a next tax bracket. I think that's a big misnomer for retirement income planning. I hear this a lot. I've heard this with new clients coming on board. Our accountant said, don't go into a new tax bracket. Our old advisor said, don't do this or don't do that. We need to understand that if you go into a new tax bracket, it's not the end of the world. Municipal bonds, if you've been a high earner, which a lot of our clients are, this can still create taxation on your Social Security.